Welcome to this video. Today we're going to talk about Beyond Meat. Last Friday, Beyond Meat closed bullish with an engulfing pattern that shows signs of a bottom. Tomorrow are going to be the earnings and they're going to be really important for the future of this company. We are going to find out what the probabilities are of a positive gap up in the earnings tomorrow and whether now is the time to buy more. So buckle up and let's dive right in. So we're now looking at the charts of Beyond Meat and we can see that it's now trading around $1.40. My average cost price is around $1.85. And here you can see a bullish engulfing pattern where the bullish candle engulfs the red candle, and that often signals a bottom. So the earnings are very near and we can see that the estimated earnings per share is minus 40 cents. And the estimated revenue is around 68.98 million, so around 17 million. So the expected revenue for the earnings is around $69 million. And here we can see the latest quarters, and we can see that almost every quarter is more than that. 79, 92, 102, 75, 73. Only one quarter, 125, was also around 69 million. So if you take the average, it's much higher than 69, probably like 74 or something. So I expect more earnings. I think the consensus is a little bit too pessimistic, and that's great because once there is a gap up, then the probability of a gap up in the price is also much higher of the stock price. I expect the reported revenue to be higher than the estimates, which is great for tomorrow. But what about the earnings? First, we need to know what earnings per share is. And earnings per share is net income divided by the total shares outstanding. So the estimates were minus 40 cents on TradingView, and the net income is earnings per share times shares outstanding. That's the formula. And net income is minus 40 cents times 397.61 million. That's the total amount of shares. And then you have minus 157.85 million. But the estimate earnings per share are per quarter. So you need to divide it by 4. And the estimated net income for the quarter is thus minus $39.46 million. So the expected earnings per quarter are minus 39 million. And if we can see here, you can see here the last few quarters, quarter 4, 2023, minus 155 million, minus 54, minus 34, minus 26, minus 44, minus 52, minus 29, and then now minus 39. That's what they expect. But this could definitely be lower, and I will explain you later why. And later I will explain you also why I think the earnings will be a big surprise this time. The revenue and earnings could also be higher is that in the last few weeks they have expanded a lot with their products. For example, here they did a Walmart deal, then here they did collaboration with Erewhon, which is like an expensive supermarket, and most recently Beyond Meat teams up with Hardware Cafe to bring the latest Beyond Burger to fans nationwide. So they're distributing like crazy. Now we're looking at the option chain of Beyond Meat. And with the option chain, we can kind of get a good probability of where the market is going to go in the next few days. We're going to look at the 14 November options, which are pretty soon. And the earnings are coming. So let's see what the probabilities are that it's going to be positive or negative. So the price is now at $1.39, which you can see here. That is like the current price. And we're now looking at the strike price of 1.5. So that's slightly above this price. And we can see that the call option has a delta of 0.52, which means that there is a 52% probability expire in the money at expiration, so in a few days. And here at the puts, we can say there's a 48% chance, now 49% chance, that it will drop lower. So there's a slightly higher probability based on option pricing that the stock will be higher because 1.5 is above 1.39 and the probability that it will be in the money is over 50%. Can it go to $7, $6, $5? Yeah, it can go there, but the probability is only 3% chance that we hit $5 in a few days. And if we want like $7, that's only like a 1% probability. You can also see that the implied volatility is around 200% around the strike price. This implies that traders are expecting a big move. In this article on their official website, they announced that Beyond Meat to report third quarter 2025 financial results on November 10. 2025 and hold conference call on November 11, 2025. So in short, they will release the earnings after close today. So the market will probably react today after close. And on November 11, they will do the conference call. One aspect of BYND that makes this a risky company is that it doesn't have a strong economic moat, at least for now. So here we can see that the overall moat score is a 3 out of 10, and the moat consists of intangible assets, switching cost, network effect, cost advantages, and efficient skill. And we can see here the strength and risk. So it's a strong early mover brand in plant-based meats. And I think BYND has a really good name, and many people know it, and they distribute the products well, and that's a great thing. And they do partnership with major retailers and food chains like Hardwood Cafe and Walmart, for example. So the risks are that there is a high competition from traditional and alternative protein producers, especially private companies like Impossible Foods, and there's low switching costs for consumers and retailers. It's very easy to buy another burger. We're now looking back on StockTwits, and we can see that the market is up 3.6% in the pre-market, and the sentiment is still bearish. However, because of last Friday's bullish close, it's great to see that a lot of people are getting more bullish and people start to believe again in this company as a meme stock. So we have mass psychology behind us for sure. On this page, we can see the short interest ratio and the short volume of BYND. And we can see that the short percentage of float is 13.25%, and it takes 0.4 days to cover all the shorts, which means that a massive short squeeze is probably unlikely. However, I do expect the market to go up through bullish sentiment and outperformed earnings. I'm very bullish on BYND, but always remember to avoid these 3 mistakes, because you can never be 100% sure about something. And that's why diversification, risk management, and certain rules are pretty important. For example, don't use leverage, don't borrow money from brokers to invest, because that leads to big losses, and you don't want margin calls. The volatility of meme stocks are already extremely high, so you don't need that. Always don't break your allocation rules by wide margin. Let's say from your portfolio, you only allocate 5% or 2% to BYND, and you stick to that. You don't do more, so you can maximum lose 5% of your portfolio, for instance. And don't fall in love with one business or stock. You can never 100% predict the future, so you need to manage your risk well and always do your own due diligence and research. So the market is now open and it's trading at $1.45 at the moment. And you can see that my average cost price is around $1.85. I'm still down 22%, not too much anymore. And the earnings are coming soon. So I expect it to be bullish. I think the probability is just higher that it's going to gap up. And after a crash from over 85%, there was an engulfing pattern here. And now it seems to go up. So the path of least resistance is up, in my opinion. And I think that in the worst case scenario, if the stock price is going to drop, I think that $1 is a good resistance level. So if it drops here, I'm willing to buy a little bit more, and I think it can bounce off of $1. Can we go all the way here, 85, 50 cents, maybe a double bottom? Could be possible, but I doubt it. I think it will be very unlikely. BYND is a real product that's sold in over 80 countries, and it's known worldwide. So I don't believe that this business is just going to disappear, despite having some financial troubles. Of course, the shares were diluted, but that news is all pretty old already. And I think it's looking bullish right now. But let's see what's going to happen during the earnings. Always do your own research. This is not financial advice. And don't forget to like and subscribe, and I'll see you in the next video.